back to Morning Markets on Tuesday the 29th of March. On screen we can see the key market moves from yesterday. Key takeaways: we had positive returns in stock markets across the UK, the US, Europe and throughout Asia. Bonds also provided a positive return as we saw yields move lower on US and UK government bonds, and the US dollar strengthened around 0.4% as markets started to build in their expectation of further monetary policy tightening, so more interest rate hikes to come through this year. Energy prices, including oil, so Brent oil, and also natural gas prices moderated, so we saw Brent crude hit around $109 per barrel, and we saw natural gas prices in around 2% on the day. It was a relatively quiet day from a data perspective, but on Morning Markets we've discussed quite often the impact of central bank policy and central banks' policies' impact on currency markets such as the US dollar. An interesting aspect we were discussing on the desk yesterday was the US dollar relative to the Japanese currency, so the Japanese yen, which reached a 7-year low on Monday. The reason for the devaluation is largely because of the difference which you've got there in central bank policy. Within the US, we've seen liftoff in terms of interest rate hikes from zero bounds. We are now expecting to see around 7 interest rate hikes come through in the US this year. In Japan, they are maintaining what we call a very loose monetary policy stance. They're using intervention to keep yields on 10-year government bonds below 0.25%, so between 0 and 0.25%. The reason for this is to stimulate economic growth in Japan, given they're not facing the same inflationary pressures as we're seeing here in the West. They are struggling to get inflation to a 2% level, and also to manage debt servicing costs, so they've got higher levels of debt on government balance sheets, and raising interest rates would increase the cost of managing that. They are allowing yields to rise higher on longer dated bonds, so 30-year government bonds are allowed to sit at around a 1% level to provide some sort of return to Japanese longer dated bond investors. To support this objective of maintaining interest rates at a low level, yesterday the Bank of Japan stepped into the market offering to buy unlimited amounts of 10-year government bonds to bring those yields back down towards that 0% level after they'd been caught up in the global sell-off in government bonds which we've seen since the beginning of the year. It'll be interesting to see how the developments occur and how capable the Bank of Japan are in maintaining this level of policy. We only have to look back to Australia, which we were discussing this time last year, where they had to bring in a more flexible approach in order to managing yields at this point in time. Overnight, we also had further detail from the Japanese government in terms of their plans to stimulate economic growth through further government spending, and we'll find out more around this in the coming weeks with a plan for this to step in by the end of next month. Japanese stock markets reacted very positively to this news overnight. Thank you very much for watching. We look forward to bringing you up to date tomorrow here on Morning Markets.
Subscribing to the True Potential YouTube channel is quick and easy. Simply go to the channel on your desktop or through the YouTube app on your phone and click the subscribe button. You can then press the notification bell symbol if you wish to be notified as and when new videos are released. Doing this is a great way to keep yourself updated with market developments and personal finance insights. Thank you to everyone who has subscribed, and we look forward to continuing to help you do more with your money.